Most traders overcomplicate market structure on the lower time frames, but the truth is, it's no different from the higher time frames. In this raw and unfiltered breakdown, I'll show you exactly how to mark up structure on the 1 minute chart with precision. If you're skipping this, you're missing out on a game-changing edge that could level up your entire approach to trading. Now, if you want to see a pair of your choice in a following week's video, do leave a comment below and let me know which pair you would like to see. And of course, if you want to take your structures to the next level, next step in your trading, then do check out the 90-day profit trading system. There's a link below in the description of this video. We do have a few spots opening very soon again. So we're on the Euro CAD, currently on the daily time frame. And the way we use these structures, if you're not sure, don't worry. By the end of this video, you'll have a good understanding of the way we mark things up. And then the next video coming up, we'll go through step by step exactly how you apply this. Now, I've been using this since the beginning of this year, changed the way I look at marking up my charts. It's a very quick procedure once you understand it. Now, if you're not sure, you are struggling to understand it, please watch these videos over a few times before asking some questions, because I'm sure you're going to find you've missed something throughout the video and it's going to give you that aha moment. Now, previously, we've been through, and you have asked for more of these types of videos. We've been through marking up our structures on the daily, weekly, monthly timeframes. What we're going to do today, we're going to focus on the lower timeframes. And in fact, we're going to go all the way down to 1 minute time frame here. I want to show you that you can apply this to the lower time frames like the 1 minute, and it still gives you the exact same process whatever time frame you're using it on. Now what I'm going to do as well, I'm going to just go back in time. We're quickly going to grab that replay mode and just quickly mark an area off. Okay, I have no idea where price is going to go, so I'm not calling this because I understand I've seen where price is going. I'm using the strategy to show me the direction we're going. Now, obviously, just one time frame, especially what the 1 minute time frame, you would not just apply this on one time frame, but use on multiple time frames. But there's no point me going down that road at the moment until you're consistent at marking this type of structure out on your charts yourself. So, what we're going to do, we're going to mark off this level right here. We're not concerned about anything here to the left. We're going to run price first for a little bit. So we're looking for price to show me a move up, move down. Okay, so I have a valid break of structure I would have right here. So that's a break bearish in the market. Now what I need to understand with this, let me just do a quick sketch for you, is you need to understand when we're seeing price making these types of moves, okay, and we see the break of structure. In this example, it's a bullish break to the upside. It's going to create, well, we have a low in the market here, and then we just add a low and bottom left, that will do. And we're going to create a valid high here. Now, don't worry too much about what we're seeing, okay, with valid highs and lows, because the following video comes after this one. We'll go through step by step exactly why it's a valid high, why it's a valid low, why we're marking it where it is. I want you to understand and just watch this video to see how simple the flow is when we start marking it out. So this becomes what we call our trading range, and it's important we're using a trading range when we're looking for entries. Now we can either trade against a trading range, or we can trade with the range when we're looking for pullback to areas, on this example like to an area of demand for continuation. But we can also look for counter trend trades against the range once you understand it. But that is the process. So all we needed was a high and a low here. So since we see this high created, it is a valid high in this strategy, we can mark it out. Now currently I don't have a valid low, so we're going to continue forward with some candles, and we still don't have a valid low created. Let's see if we get a push up, and we do. So this now becomes a valid low. Let me just go closer into the candles. You can see more what's going on. So we have this, forget about anything to left, okay? So we have this high created here. And when we see this bullish close up and then a close back down and breaking structure, that becomes my valid high. And again, the end of this video is a step-by-step exactly how to use all of this strategy. We pull down, we create this low, we see this bullish close up on this candle, we create a valid low. Now we have a bearish bias in mind. Now, using multiple time frames, because on this one time frame, I cannot say for certain whether we're going to run this low or run the high. We could simply reverse. Understanding what I can see at the moment, okay, we are potentially looking for a run lower for the low again. But let's just go from what we can see with price, okay? And we come down and we sweep the low. Now, the reason I could see potential price running lower is because it's a bearish pullback into the area of imbalance, okay, and the area of premium on price, and we run for the low. You see, there's many more factors we can add into our trading to give you that edge in your trading. So if you're finding that inconsistency, you are struggling, stick with this strategy of these market structure. I'm now teaching every Wednesday. Also, you can have Sunday videos, more in-depth videos to help you to understand other concepts. Again, like I said, if you want to take it even further, then do check out one of those spots, okay, for the 90-day profit trading system, but they do sell out very fast. And I will be notifying you on the community wall when they open up for new spots. So what we see here, we see this sweep. This is a valid sweep of this low. Now, it doesn't mean it's a break of structure. Yes, we make a lower low from this high. Okay, so you may look at this previously and see price. We just grab that again. A push down, break of structure, a lower high, a lower low. You may look at this as a continuation bearish in structure. Now, for me, until we see a close at that low, it's not. And in fact, previous video I did, which you can find linked above now, will take you through to a video understanding that actual concept of what the BOS is and how to validate it. So from this sweep, depending what we've got left here, okay, we do sweep this low as well. So we could see a run higher and a push through this high for a reversal. Or price could just take this high, sweep, and then run and close down. Let's just go forward and see what happens. Okay, we're looking to see what happens. Price does sweep this high, reverses, and sweeps low again. So we're looking for a close. Let's see if we can get a body close down on this next few candles. Now we've got a body close through that low. This gives me a valid break of structure. So I'm just going to mark it off now. This is a valid break to downside. Continuation of the bearish bias. When it comes to my high, this is going to become my new valid high. I haven't got a low created yet. So we go forward with a few candles. Let's see what happens. In fact, speed this up. And it's a strong push down. And this candle just closed, validates the low. So now I have a valid new trading range to the downside. We have some areas of liquidity here where price could pull back to run those highs into the area of supply and continue lower. But that's a completely different way of looking at the market with supply and demand, liquidity and imbalances. What I want you to take away from these videos is this simple method of marking your market structures out to take away that stress. It's a mechanical way of doing it. So each and every time you do this, it's always going to be the same. Okay, so we just had a quick refresh for some reason on the chart. So from this point, we'll go forward. We're looking for the pullback. I have a continuation bearish. Now we've just swept the low. So it looks like we could have a push higher from here. And we get a straight close back down. So that's now a valid break of structure. Now remember, this is a 1 minute time frame. So price is going to move more erratically and quicker using on a 1 minute time frame, but the process is still the same. Now, once I've seen this close down, my valid low, okay, hasn't been created yet, but my valid high is created here. So we have a pullback. We've swept this high. We haven't closed it. So at the moment, I don't have a valid low to mark. Let's go forward another candle. Now I have a valid low to mark. And we have a new break of structure. That's how quickly you can find your reversal in the market. So now we're waiting for a valid high to be formed. Now that is formed on this bearish candle closing down. Okay, look how we're gone from that larger trading range to a tight range. Now we're holding within this range. At the moment, we stay as we are. We have a high and a low of our trading range, our last bullish break of structure, waiting for a break up or break back down. Okay, so let's just see what happens. And we do get that break down. Okay, so once we see this break to downside, that's our new bearish break of structure. Now our current new high is going to be off this high. and our low has been formed right here. So there's our new bearish trading range. Let's go forward again with price. I'm going to show you how we can quickly do this now. Let's just work our way through. So we go sweep of the high. Now we go to valid breakout. So we've got another shift to the upside. And remember, like I said, you'll be using multiple time frames here when you're doing this. So our new valid low is here. Okay, we're now on a bullish bias. Let's see, we get the new valid high. We've got no valid high created yet. No, we continue bullish. And let's see what happens. No, we're still going bullish. So you can see how we've gone from that smaller range to a strong push to the upside. Okay, still no. Now we've got a valid high. Okay, we've got valid high created. So that's a large trading range, a very big trading range we're within now. So either looking for a continuation bullish, the continuation of this current range, or we're looking for a reversal bearish. Now we can look to trade against that range using multiple time frames and everything else we understand. Or we can just look for price to continue higher. Let's just go forward and see where we go. So we've actually just pushed high. We had a small pullback and just gone higher. So now we've gone from that larger trading range, and that's a valid high just been created. That's a valid BOS in the market. And our new valid low is here. So we've got now that larger trading range to that smaller trading range. Now let's keep going forward. Let's go quicker with this now. As you can see how quickly we can apply this. So now we've got a new breaker structure. Okay, very easily. Our new high is actually here. We haven't got a low formed yet. Let's just double check that last. Actually, we may have a low formed there. I'll go closer in if you're not sure. Double check. No, we don't have a low formed yet. So we'll continue with price. Let's go forward another candle. No. Okay. We'll wick up. What price has done here? It's wicked up to this area of imbalance in the market. We're looking for formed low. So we haven't. We continue bearish. And this bullish candle is validating the low in the market. So that's our new trading range. Okay, so we have some liquidity above these highs. We could see a pullback from here or continuation lows, go forward, and we get a break straight away. So on a 1 minute time frame, you can see how price moves much faster. So just put this in the right place. As soon as we see that, our new high is formed here. We don't yet have a new low. Let's go forward with price again. Okay, now we've created this new low. Let's bring this across. So that's our new low in the market. So our new trading range is bearish. We've got a strong pullback towards this high. Let's see what happens. Are we going to reverse bullish, or we're going to continue back down and take that low again? So we come back up. We swept this high, swept the high of the move, but a sweep is not a validated close through. We continue to be bearish at the moment, and the market is moving quite sideways. Let's see what happens. Are we going to push through? We do. So this is just a sweep of liquidity for a break bearish. Okay, so this is how quickly we can identify that's our break. My new high is going to be formed here. We don't yet have a new low, but we're waiting for it to be formed. Validate the low. Okay, so we validate on the bullish close of that candle. That's our new trading range. We're bearish once again. Continue forward. Okay, so we just swept the low. Potentially we're looking for close down for the continuation. We're holding, and eventually we get that close down. So the continuation is another break of structure from this low. Okay, there's your new break of structure. Now when it comes to my current high, it's now going to be moved to here. And again, don't worry, the next video will explain exactly the process doing this, but that's now the new trading range. You can see how it's gone tighter range. We get another bearish break to downside. And we have a new high created here. Now, we still don't have a valid low to mark. We continue with price. Now we've got a valid low. There's a valid low. And you'll be using multiple time frames, okay, high time frames as well, looking for reasons to take a sell when you're using this approach. I'm not saying we're just going to take an entry like here. You'll be going down to like 30-second chart, 15-second chart if you was using a 1 minute time frame to trade with. But what you can use is the higher time frames and look for the same type of entry when you're using these structures. So let's continue forward with these structures. So you can see how quickly you can identify these. So again, a valid break of structure is here. We have a valid low created here, and our new high comes here. Okay, we continue to be bearish. Let's move sideways, see if we reverse, and we do. So now we reverse structures back bullish. So look at how easy we can identify this, and this remains our low. We don't change it. We haven't got a valid high, but look how easy you can do this on a 1 minute time frame, just like we did on a daily. Okay, exactly the same process. And now we've got a validated high. So this is now our new high. That's our new trading range. We're bullish, looking for a continuation to the upside. That's what we're looking for if higher time frames agreed, okay, with it. So we've gone up, we've swept the high. This could reverse the market bearish. Let's see if we do get a push lower or a valid break up. We're moving sideways, slowly pushing down lower. Now we do have some areas here of demand. Let's shrink the chart back and we get the valid break higher as expected with that trend. Now we can mark this off as our break of structure. We don't use this high, we use this high. When it comes for our valid low, my valid low is going to be this low here. Okay, this point is the lowest point. Okay, but we don't have to always use the lowest point. You'll see that as we go along. And that is a valid high being created. Now we're looking for a pullback against that trading range. We're on a bullish range. So we're pulling back towards these areas of bullish imbalance. Then we want to see them hold and shift higher. We just had a sweep of the low, potentially looking for this high to be run next. Let's see if it's going to hold, and we do get the next break higher. So then that's your valid BOS. Okay, now when it comes to my low is not here. Yes, it's the lowest point before we break, but my low is created here. And that's using this mechanical way of marking your structures. Continue forward, no reason. Now we validate our high. Okay, you can see how quickly we can mark these out. Now, if you're enjoying this and you are finding that this type of structure is going to help you in your trading, then I do want to know this. I want you to let me know in the comments and say, this will help me with my structures in the market. Let's continue forward. Let's see if we break higher again. So at this point, we've closed at the high. It's not a valid break. And by the way, my high should be just there. Let's continue and see if we break up. Okay, and we do get a break up. So now when we see this as a break up, that becomes a valid BOS. My new low is here. Okay, it could have been here for a valid reason, but it didn't give me a validation. Now if we go forward, we look for a new high, and our new high is created, and that's our new high. Okay, this is how quickly you can mark them up. Doesn't take long to understand. Now we get a shift and a new low is created. But we get a shift in bias, back to bearish. Now my high becomes this high. Okay, that's my new valid high. Let's continue forward. We've now got a bearish bias, looking for a continuation to the downside. Now, all depends whether this is a deeper pullback on a higher time frame. We don't know that because we're not doing multiple time frame. So we pull back towards our areas of supply on that trading range within the areas of premium. But like I said, if we look back, this could be a deeper pullback to this area of demand on a higher time frame. Let's go forward, see what happens. Are we going to go higher? Are we going to run lower? Strong bearish push, straight back up, sideways market, and eventually we do break out. So we have that break of structure from this high. Now my valid low, okay, no, it's not here, it's here. That's my valid low on this breakout area. That's my new structure low, my new potential trading range. Let's go forward and we get a valid high created. We could see a continuation in the next candle. Let's see what happens. No, we sweep the high. See how we swept the high, create a pivot high. We could see a run, take out this low to fill these areas below. Let's go forward to see what happens, but we get another push up and eventually a break at the same time. So the continuation of that bullish market continues here. And as soon as we see this break up, your low is now here. See how it's getting closer and closer. When we start seeing these, we can see a strong bullish trend, or we can see a quick reversal in the market. So let's wait for that valid. And there we go. A valid high is created there. And potentially we could see, okay, a big wick down, potentially news. It's filling all this imbalance here left over. Let's see if we get a close down. We expect that close down. We do. That close down is validating, okay, this BOS. Like I said, we can either see a strong push away or we can see a quick reversal on this move. So we have our valid high. We don't have a valid low created yet. Now we have a valid low. That becomes here. We just broke structure. Okay, so we've gone from a bearish to a bullish structure straight away. And we haven't got a valid high created yet. And still not yet. And we continue bullish. Okay, you can see how the market has continued to be bullish. We still don't have a valid high to mark. Let's see, this one closes down. It does. Now we've got a valid high. So a new trading range, okay, goes from this low to this high. That's how quick and simple we can mark all this out. Now, it may seem a bit boring at times, but who said it had to be exciting trading? It doesn't need to be exciting. The more simple something is, the easier, the better, the more profitable it will make you. Don't go looking for some flashy new indicator, some flashy new strategy. Keep it as simple as possible. Hey traders, we'll get back to the video in a second. But if you're tired of second guessing trades and struggling for consistency, listen up. Danny was just like you, stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This system gives you everything you need to trade profitably. Step-by-step strategy, personal support, and lifetime community access. Spots are limited and we only take a handful of traders each time enrollment opens. If you're serious about finally seeing results, click the link in the description now before it's too late. Now back to the video. Now, like I said, to learn this strategy in a step-by-step format, check out this video coming up right now. It's going to help you out.